What if I told you that the S&P 500 index has returned 82% in the past 5 years and there are still ETFs that have done even better than this? Sounds too good to be true, right? Stay tuned in this video because we're diving into 3 powerhouse ETFs that you will not want to miss. Hey everyone, welcome back to our channel. My name is James and today you will learn why these 3 ETFs stand out among the rest, how they have performed, and their top holdings. And last but not least, whether they are the right fit for you. And for those who are new to the channel, do remember to tap the like button, subscribe to the channel so you get notified whenever I release another interesting video. Alright, let's dive right into our very first ETF, the VanEck Semiconductor ETF, ticker symbol SMH. So this ETF focuses on the semiconductor industry, which has been a crucial driver of tech innovation and also supercharging this AI rapid growth. But what makes SMH so special is that if you go to the info tab over here at the FSM1 and take a look at the ETF's top 25 holdings, you will have seen leading companies like Nvidia, TSM, Broadcom, AMD, ASML, and so on and so forth. Okay, so all these companies have been at the forefront of the semiconductor revolution. And to give you an idea of its performance, I go to Yahoo Finance and I compare the S&P 500 index versus the SMH price performance. So you can see that SPY is here and SMH is the one in orange. And SMH has underperformed the market since like long time ago. All right, you can see that until the year 2017 is where things start to get better for the semiconductor industry. Okay, and like a lot of innovation starts to happen, the Moore's law and things like that starts to kick in, and it starts to perform on par with the S&P 500 index. And since the COVID-19 pandemic, it has just skyrocketed and surpassed the S&P 500 index. And if you have enjoyed this video thus far, I will greatly appreciate it if you can help me to smash that like button, subscribe to my channel and ring the bell so you get notified every time I release another stock analysis video. Next up is the Technology Select Sector SPDR Fund. Okay, ticker symbol XLK in short. Right, this ETF is all about the tech giants that have reshaped our world, including heavyweights like Apple, Microsoft, Alphabet, which have delivered substantial growth in the tech sector. All right. So the standout feature of this ETF is that it's focusing on some of the most influential and the companies that have big moods around them. For instance, when we talk about the top 25 holdings again, you can see that it comprises of companies like Microsoft, 22% weightage. Okay, Nvidia 20% weightage, Apple 4.5, Broadcom 4%, Salesforce 2.5%, and Adobe 2.5%. Okay, so this in turn tells us that this ETF is focusing a lot on the tech stocks. Okay, and if you were to look at how the ETF has performed against the S&P 500 index, is pretty similar to the semiconductor index, whereby they start to really outperform the market significantly since 2017. Perhaps due to the tech boom, all right, where all the tech giants, for example, the Magnificent Seven, starts to build their strong mode and deliver impressive growth, be it the top line or the bottom line. Okay, and this is testament to the ETF's strong selection of high growth tech companies. Speaking of which, I want to share about Moomoo as it is one of the best low cost brokerage in Singapore. Whether it is zero commission for buying US or Singapore stocks, super user friendly platform, and a huge range of investment vehicles for you to choose from, like stocks, ETFs, options, and even bonds, Moomoo has everything for you. Plus, they even offer a generous sign-up bonus up to $970, which includes a top 5 traded stock bundle, one Apple share, and a 6.8% guaranteed returns from their Cash Plus promotion. So why wait? Click on the link here or in the description box down below to open your Moomoo account today and start taking advantage of all these incredible benefits. Our ETF trail is this Squawk US Large Cap Growth ETF, ticker symbol SCHG. Alright, so this ETF focuses on large cap growth stocks in the US market and offers investors exposure to companies across various sectors. So if we were to look at the info tab, okay, and take a look at the top 25 holdings, you can see that although they have exposure to the more established tech companies like Microsoft, Apple, Amazon, Facebook, Meta, Alphabet, okay, Google, they also offer a mix of other sectors like healthcare and consumer staples, such as United Health Group, Costco Wholesale, um, maybe Salesforce, Thermo Fisher, and things like that. All right. So I would say that this ETF offers a more balance between the tech exposure as well as a broader market diversification. So now let's take a look at how the ETF has outperformed the market. Okay, and you can see here that they started, okay, so this is depicted by the green color line SCHG, and they are launched on 2010, the year 2010. And since then, okay, from the very beginning, I think they have already outperformed the market index. I think maybe it's perhaps due to the how they allocate a higher percentage to the growth companies, and as a result you can see that over a period of around 14 years, okay, it has come up to 742%, okay, versus the S&P 500 index, which is 432%. And if I were to click on the 5-year mark, okay, so it's 137% versus the S&P market index of 82%. Okay, so this is quite impressive given that, they are quite similar, but at the same time, because of how much percentage you put into each component stock, you are able to beat the market index. To wrap up, which of these ETFs do you think will continue to do well in the next year? Or do you think that other industry ETFs like the cybersecurity or the cloud computing sectors will take the lead in future? Share your thoughts in the comments down below. Before we end off, if you find the video helpful, I would appreciate it if you can help me to tap the like button and share the video so more people get to know about this video. Next up, don't forget to check out this video over here if you have another few minutes to spare. And I will see you next time. Thanks for watching and ciao.